Well, shares of Pet Valu are falling sharply this morning. The company's management is expecting muted growth of discretionary categories like toys and accessories, which could last into 2026. However, it anticipates demand for food will remain stable. Here to help break it down for us is Martin Landry, Managing Director, Equity Research at Stifel. And Martin, thank you very much for joining us.
Thanks for having me.
What's driving this right now when you look at those numbers?
Yeah, I mean, if we look at the shares, obviously investors are a little bit disappointed this morning at the results and the outlook. The shares are down 14% as we speak. I think what's happening is investors expected an acceleration of same-store sales growth into H2, into Q3 and Q4, versus what the company has realized in Q2. And that we'll have to wait a little bit. Same-store sales for Q3 were up 2.3%, a little slower than Q2. And with guidance, it suggests that Q4 same-store sales will be up 2%. Again, a little slower than what investors expected.
And I guess, the big drop-off was in toys and accessories. Is that just a kind of bigger picture thing? People are watching their money a little more, but the food they needed for the dogs and the cats?
Yeah, that's a fair assessment. I mean, overall, the Canadian consumer is a little bit under pressure, a little frugal, and it's reflecting and reflected as well in the pet space. I think investors are probably getting to the essentials, food, and maybe passing on some of the fun things like accessories and toys for pets.
And has Pet Valu said what they might be looking at to try and offset that, especially if it's an extended trend?
Well, they did talk that this frugal consumer could spill into 2026. Management did say that we should temper our expectations early on for 26. But overall, when you look at the pet category, and it is a phenomenal industry, right? Mm-hmm. Historically, the growth of the industry has been 4 to 6%, twice as fast as the GDP. So it's a great category to be in. It's got defensive characteristics. And it's one that investors historically have liked a lot, right? Predictable, long, stable growth. So I feel like right now it's not different than the overall Canadian consumer names out there that are a little bit under pressure because of a frugal consumer right now, given trade tensions and inflation.
And what are some of the defensive characteristics it has? I mean, I think people look and they see its pets, but what are some of the things that make this somewhat bulletproof?
Yeah, there's two things that keep coming back in terms of trends. There's the premiumization of the food, especially, right? People feed their dogs with much healthier ingredients, are willing to pay more for frozen food as well. So that premiumization has played out over last years and will continue into the future. And then humanization. We see people put a coat on their pet. We see people push their pet in strollers. I mean, these are trends that also are playing in favor of Pet Valu because they are targeting the higher end consumer.
And so they're paying attention to those and leading the way.
Yeah, I mean, again, when we look at Pet Valu, what we like, it's a leader in the space. They've got 18% market share of the Canadian industry. They've got 850 stores, a potential to grow to 1,200 over the next years. So, potential to grow the store count by 40%. And at the pace of 40 stores a year, we've got 8 or 9 years still ahead of us in terms of healthy store growth. So before we get saturated. So it's a nice story. It's a nice growth story. It's a leader in the space and in the space that we like a lot.
And does this earnings report impact that at all, or is those plans still full steam ahead?
Well, I think everybody is resetting their growth expectations on the top line and bottom line a little bit today, given that we could be in a period of a little slower growth near term than what we expect. So, I mean, I think people saw Pet Valu able to grow their earnings at low double digits. The growth algorithm is a store count growing up by 2 to 4%. The same store sales growing up by 4 to 5%. So top line growth in the high single digits, and with a bit of margin expansion and share buyback, you can get to low double digits. But maybe that's for longer term. Near term will probably be in single digit growth rates.
Okay, and so the overall outlook for you?
Look, we're bullish on the name. It's a high quality small cap name that people should look at and take the opportunity and the weakness to add to their positions.
Okay, Martin, thank you very much for joining us today. We appreciate it.
Pleasure.
Martin Landry is Managing Director, Equity Research at Stifel.